Sui and Aptos are two crypto projects you need to keep an eye on in the upcoming bull cycle for the next few years. And with their shared beginnings from Meta's Diem project, it makes sense why Sui and Aptos are often seen as direct competitors. So today, let's break down both of these projects, their similarities, differences, and see which one has the better chance of long-term success. Welcome back to the Virtual Bacon channel, where I teach you how to build wealth with crypto. As you've probably seen, the Sui and Aptos blockchains are two huge hype trains that have dominated the crypto market since their arrival at the end of 2022. And a big reason for their hype is because both projects have roots in Meta's cryptocurrency project known as Diem. While operating within Meta, Diem aimed to build a global payments network using blockchain technology. Unfortunately, due to regulatory hurdles facing publicly traded companies, the project had to be discontinued in 2022. But out of Diem's ashes, Sui and Aptos were born, and that's why these two projects will likely always be compared with one another. So how do they stack up against each other and against the rest of the layer 1 market? Let's find out by breaking down their technology, their ecosystem, their network activity, and their tokens price predictions. First, let's start with Aptos. Aptos is a highly scalable layer 1 blockchain co-founded by CEO Mo Sheikh and CTO Avery Cheng. Like I mentioned before, both of the founders were former Meta employees with extensive experience in the blockchain industry, and they've built out the Aptos Labs team with PhDs, researchers, engineers, designers, and strategists, most of them coming from Meta. They even recently started to expand their team by hiring former Solana staff to complement their ecosystem, but more on that later. As we saw in the last bull cycle, the new layer 1 narrative, also known as the Ethereum killers, got a bunch of hype as they promised insane speeds and low costs. But eventually, these projects had their fair share of struggles and often weren't as fast as promised, and they all faced significant adoption hurdles. This ultimately led to users continue using Ethereum. However, Aptos isn't just repackaging the same story as these other layer 1s directly copying Ethereum. They have built out the entire blockchain from consensus to smart contract language from scratch. Again, thanks to years of R&D at Meta. The native programming language for Aptos and also Sui is called Move, which is based on the highly popular Rust programming language. This is a language that's widely adopted in the Web 2 world. Move is a specialized version of Rust specifically built for smart contracts. Now, this Move language sits at the center of the Aptos, Sui, and Diem blockchain innovations, which aims to become the JavaScript of Web 3 for smart contract development. Compared to the Solidity language used in Ethereum, there are three main benefits of Move. First, Move allows applications to achieve higher throughput with parallel processing. Secondly, as an interpreted language, Move doesn't have a compiler, and as a result, there are no compiler bugs. Lastly, Move was designed with security in mind and aims to eliminate common vulnerabilities found in Solidity, such as reentrancy. Unlike most blockchains which execute smart contracts sequentially in a chain of blocks or require massive parallel workloads, Aptos processes all transactions simultaneously and then validates them after. Failed transactions are aborted and then re-executed later on thanks to software transactional memory that detect and manage conflicts. This approach streamlines the network's throughput capacity and can address a major bottleneck for other layer 1 blockchains. With the scalability of the architecture and the language, Aptos is theoretically able to process over 130,000 transactions per second using its parallel execution engine, although they're currently running at about 4,000 transactions per second. Okay, now let's take a look at Sui. Sui is another innovative layer 1 blockchain descended from Meta, which is now under the company Miston Labs. It was co-founded by CEO Evan Chang and CTO Sam Blackshear and a few other former Meta employees. Evan Chang formerly headed research and development for Meta's crypto wallet effort called Novi, while Sam Blackshear also created the Move programming language while at Meta. But more on the language comparisons later. Unlike traditional blockchains, Sui is designed to scale horizontally, organizing data into independent objects and allowing transactions to be executed in parallel. This approach is highly similar to Aptos, and it's not only able to handle high transaction volume, but also reduce computational power and transaction costs. This makes both Sui and Aptos ideal solutions for large-scale applications that require high frequency and low-cost transactions. Think of use cases cases like gaming or social media. Sui is also able to process well over 100,000 transactions per second, just like Aptos. So in summary, for the technology, both Aptos and Sui offer 3 of the same improvements over other layer 1 blockchains. Number 1 is a more flexible smart contract architecture that is built with tokenized assets and ownership control in mind. This allows programmers to natively create on-chain assets. Number 2 is the robust security measures thanks to the Move programming language natively preventing common solidity pitfalls. And number 3, both blockchains have enhanced scalability based on parallel processing instead of one single chain of transactions. This allows the platform to accommodate higher transaction volumes, and also they are less prone to DDoS attacks. Okay, now that you know a little bit about both projects, let's look at how they compare in a few key metrics, with the first one being their financials. It's safe to say that Aptos and Sui are 2 of the most heavily funded crypto projects out there, and it's a big reason people were calling both of them VC chains in their early stages. Aptos closed their fundraising round before Sui and raised over $350 million at a $4 billion valuation. Sui is also not far behind and raised $300 million at a $2 billion valuation. Now, both projects had large institutional investors from the likes of Binance, Jump Crypto, A16Z, Tiger Global, and Multicoin Capital. Although people often look down on VC investors, it is undoubtedly still a positive for projects to have such a huge war chest of money to work with, especially in the bear market. This will provide stability for the projects to survive and keep building until the next cycle, so long as the investment terms and tokenomics are fair for the private investors. We'll go over this in a bit. However, one important caveat to note is that both projects were heavily funded by FTX Ventures. In fact, the last funding round of Aptos and Sui were both led by FTX Ventures, meaning they had the biggest investment stake. Unless you've been living under a rock, you know what happened with FTX. Since they are now bankrupt, they could potentially claw back their investments or liquidate their stakes down the line. The mere fact of having FTX as your biggest investor is also a huge turnoff for any large project going forward. For Aptos, there has not been any official announcements on how they will resolve this. Sui, however, has been completely transparent and shelled out $96 million to repurchase all of their company shares and tokens back from FTX. This definitely puts Sui above Aptos, as they are clearly committed to the long-term success of their project. They chose not to bag the large investment and look the other way. Instead, they shelled out all this money that's already in their bank to repurchase the stake back. Kudos to them, but we cannot say the same for Aptos. Real quick, this is the first direct comparison video on this channel, so if you're interested in this type of content, let us know down in the comments. And tell me which other projects you want me to compare next. Alright, moving on, let's look at how Aptos and Sui use the Move programming language differently. Although both projects inherited the Move language, they do so very differently. Let me explain. Move is a Rust-based programming language designed for building smart contracts and on-chain assets. When Aptos started to develop their own blockchain, Aptos continued using the same language, also known as Core Move, while Sui made some tweaks to the language and now uses what is called Sui Move. Now, this stuff can get pretty technical, so I'll try to keep it as simple as possible. These 2 different versions of Move have their unique features, and arguably Sui's version has an edge over Aptos. The first difference is the way users own their digital assets. On the Aptos blockchain, they use an address-centric model. This model only allows one asset of a given type to be stored under each address, and the transfer of assets between addresses require explicit permissions and transactions. This can lead to certain limitations, especially with the emergence of NFTs and other new use cases of on-chain tokens. Now, Sui, on the other hand, uses an object model where tokens, smart contracts, and NFTs are represented as objects. Sui's version of the Move programming language is called Sui Move, and this was developed to improve the Diem style move by taking into account the lessons learned from Diem's design and integrating Sui's unique features. Most notably, Sui Move's global storage is referenced by object IDs. This allows each address to store multiple values with a given type. So for the same type of token, you can have multiple values. Sui Move also introduced a transfer primitive that can be used on any Sui object, which is more flexible and efficient than Aptos' version. The 2 blockchains also have very different handling of asset transfers. Aptos requires 2 ledger updates for simple transfers, which is one for the sender and one for the recipient. Whereas on Sui, with their object-centric model, this usually requires only one single ledger update for most asset transfers. It's also worth pointing out that Sam Blackshear, the CTO of Miston Labs, was also the creator of the Move programming language. So it's pretty important because if there's anyone that understands the language from a deep level, I would think it's the language's creator. So far, it looks like Sui Move is an improvement from core Move on Aptos, and this might end up being the more scalable version. Now, we talked a lot about the programming language differences and Sui's Move language and how it's so much more superior to not only Solidity, but other versions of Move. Why is this so important? This is because right now the number one goal for blockchain projects is to get developers who can build cool apps and use cases and let people who want to use Move actually have somewhere to deploy their money to. More builders means more use cases, which means more potential end users. In fact, Solana uses the Rust programming language, which was one of the biggest offers that it had over Solidity because Rust is widely adopted and widely known from Web2 traditional developers. I'll keep a close eye on where the developers choose to build on in the future. And this brings me to my next topic, which is the ecosystems themselves. Right now, it is kind of hard to compare the two ecosystem adoption because Aptos has been live on mainnet for a few months, while Sui's mainnet just launched on May 3rd. For those who don't know, mainnet is when a project goes from a testing environment with fake tokens to the real deal with the full blockchain being fully functional. Currently, Aptos has $44 million of total value locked, or TVL, and 23 active ecosystem projects with real money deposited on the network. This puts Aptos at the 33 spot for all blockchains based on TVL rankings, and 26 based on the number of active projects. Sui, on the other hand, has $25 million of TVL and only 6 live projects on mainnet. To be honest, both of these ecosystems are quite underwhelming at the moment. The numbers are okay compared to more legacy chains like Elrond, Multiverse X, and Algorand, but it's definitely not on par yet with more productive ecosystems like Ethereum Layer 2's Arbitrum Optimism or other Layer 1s like BNB and Avalanche. Most of the EVM-based Layer 1s and Layer 2s have hundreds of projects deployed with hundreds of millions in TVL. Even their closest competitor Solana has already $260 million in TVL and 103 active projects. Although both Sui and Aptos do not have high amounts of money deposited in DeFi, their user amounts are decently respectable thanks to their large airdrop campaigns. The number of new addresses on Aptos peaked at 230,000 per day, right before the airdrop happened, but this quickly collapsed to 10,000 new addresses per day right now. Sui also had similar stats in new address counts and active address counts. There are about 15,000 new addresses created on Sui network per day, with a daily active count of 18,000 right now. Keep in mind that Sui is still coming off of the launch hype, and many people were curious to try out the network for the first time, so these new user numbers will likely continue to come down in the next few months. The takeaway from these stats is that neither Aptos or Sui have a large DeFi ecosystem with high amounts of money at the moment. Aptos has a slight edge in the TVL and number of active projects department, however, it's not comparable to other Layer 1s. Both blockchains do have high amounts of active addresses, which likely attributed to their airdrop campaigns, attracting many small retail holders who are simply holding the coins and maybe staking, but not participating in the actual ecosystems. Honestly, if either of these chains want to become the Solana killer, they have a lot of work to do in terms of adoption. They can't even kill Solana yet, let alone Ethereum right now. Next up, I'm sure a lot of you want to know how the Sui and Aptos tokens compare. Aptos launched their APT token in October 2022, and the token was distributed through one of the largest airdrops in crypto history. For users who still hold these tokens, they're currently valued at over $2,000. Now, Aptos set a goal of giving 200 APT tokens to each wallet, but ended up airdropping approximately 23 million APT tokens to over 100,000 wallets. This was great for the airdrop farmers, but arguably brought more harm to the project than good. When When trading went live, large amounts of the APT token were being dumped on the market despite being a supposed 200 token per account limit. There was even one sell order for nearly 200,000 APT tokens all at once. A lot of people speculated for this to be insiders selling or just users gaming the airdrop with bot accounts. We'll never know for sure how so many tokens were dumped all at launch, but the results are clear. If you're gonna do an airdrop, make sure to do it right and prevent farming as much as possible. Okay, for Sui, they also held an early adopter campaign to attract more than 180,000 users. But unlike Aptos, the Sui token did not release an airdrop. Chances are you've heard about the Sui airdrop as free money like myself, but unfortunately none of those tasks got you to qualify for the free tokens. Instead, the Sui token was brought to market by the Sui Community Access Program, which was basically a token sale. I know some people were angry about this decision and were calling Sui a scam for electing to not do an airdrop. But to be honest, I think it's really smart considering how poorly the Aptos airdrop launched despite giving out so many free tokens. Sui really learned from the mistakes of Aptos and they tried to keep the initial token distribution as fair and equal as possible. Since the token sale happened on partner exchanges Bybit, OKX, and KuCoin, it was much harder to farm these early tokens since you had to complete KYC. Not only this, but the fact that you needed to pay money to buy the Sui tokens early also turned away the airdrop farmers. They couldn't afford to pay 100 different token sale accounts, unlike farming 100 airdrop accounts for free. While I understand that everyone wants free tokens, the model of handing out free money often rewards bots more than anything. And since we're looking at the long-term potential of Sui, I much prefer this outcome of not having large amounts of bots receiving huge amounts of airdrop allocations. Last thing to note is that people who bought Sui during the token sale got an insanely low price of 3 cents per Sui. At the current price of $1.15, that's over 35x returns. These small $45 allocations to the community participants turned into over $1,600. The returns were just as good as an airdrop, so the real community should have been really happy. If you want to see a full breakdown of exactly what happened during the Sui token sale and the whole project review, check out my Sui deep dive video, link is in the description. And this brings us to the most important section, which is the tokenomics, and we're going to start with Aptos. Since launch, Aptos managed to have a huge run up from $3 per APT to $20 and currently sits at top 36 on the coin rankings list. The total market cap for the APT token is now at $8 billion. Quite a high number considering other more productive chains like Polygon and Arbitrum are only at around $10 billion total market cap. Like most ecosystems, APT is used to pay for transaction fees, voting for on-chain governance, and securing the blockchain through a proof-of-stake model. It's also worth noting that APT does not have a supply hard cap, which means new tokens will be issued to run the proof-of-stake indefinitely. This issuance is nothing major, however, and starts off at only 7% per year and will decrease by 1.5% per year until it reaches 3.25%. These designs are the very standard token utilities for a layer 1 blockchain. Now let's look at the Aptos tokens distribution schedule. APT's current supply is 1 billion tokens with 19% currently circulating. This means there are still a large amount of insider tokens to be unlocked in the coming months and years, notably 81%. Specifically, Aptos has a 4-year lockup schedule with a 1-year cliff. Let's also break this down. The first major token release for Aptos will start in November of 2023, exactly 1 year after the token launch to match the 1-year cliff. This is when the cliff ends and the private investors will start getting their tokens. The good news is that the 1-year cliff means that from now until November of this year, there will not be any extra APT tokens coming onto the market, which means this is essentially a primed time for Aptos to make another price run-up. However, from November of 2023 until April of 2024, we will see a huge amount of APT tokens being unlocked. The circulating supply will go from 200 million to 340 million in this 6 months period. This means price will likely have a hard time moving up, and I won't be touching APT during this time. After April of 2024, the curve will smooth out and new tokens will be released a lot more slowly until the 2030s when all the initial supply gets released. So if you want to trade APT, now is a good time until November of 2023. And then I would try to wait until April 2024 and after, when the token release is not as aggressive. I would avoid this middle period between November of 2023 to April of 2024. This isn't anything new for large projects like Aptos and Sui with large private funding. It's just the nature of the game. You have to know when tokens are coming out and how fast. This helps you to best position yourself and not get dumped on when tokens are released. On a side note, if you want to trade APT token, check out Apex Exchange with the link in my bio. This is a fully decentralized exchange built on top of Ethereum layer 2s. You can access it through Arbitrum, Ethereum, etc., and it directly connects to your MetaMask wallet. There's clearly a paradigm shift moving from centralized exchanges to decentralized exchanges, but in this case of Apex, you're not giving up much because they are an advanced decentralized exchange that supports futures, derivatives, leverage, long and short, limit orders, all the advanced features of a traditional centralized exchange. And Apex is built by Bybit, so you can trust they can have super deep liquidity and world-class security. So check out Apex Exchange with the link in my bio and start trading Aptos today. Use the code BACON when you sign up to get extra 5% off your trading fees, and to enter the Trade to Earn campaign, you can even earn their Apex tokens just from trading. Let's look at the Sui token. Sui's token utilities are again highly similar. Sui's token holders can participate in the proof-of-stake consensus, vote through on-chain governance, and pay for gas fees on the blockchain. Unlike Aptos, however, Sui does have a supply hard cap of 10 billion tokens. Only half of these 10 billion tokens are currently planned to be released, with the other 5 billion reserved for the future, so they are locked indefinitely. So technically, the total supply right now is only 5 billion, while the potential maximum supply in the future is 10 billion. Looking at the Sui token distribution schedule, Sui's current circulating supply is only 580 million, which is 5.8% of the maximum supply. This is honestly kind of worrying, as the amount of new tokens coming out in the future will be very high proportions to the current supply. But that's not to say the token won't perform well. We just have to know when these token unlocks events will happen. Sui has a 6 months cliff ending in November of 2023, also matching that of Aptos. This means from now until November of 2023, the circulating supply of Sui will mostly remain the same. There will not be any extra selling pressure during this period, and if price is to make a run-up, it should happen before then. After November, however, the circulating supply will jump from 800 million to over 2.6 billion. Definitely watch out for this huge unlock event. From November of 2023 to May of 2024, large amounts of tokens will continue to get released, and after May of 2024, the release schedule will start to slow down. One good thing about the Sui Tokenomics is that half of the token supply is actually locked. So even though the total market cap might seem high, we still have to take into account that half of the value cannot be sold. Overall, I think both Aptos and Sui have quite a ton of early investor tokens to be released over the next 3 years. Sadly, this also matches up with the next bull cycle schedule if everything goes into plan and the Bitcoin halving event triggers the next Bitcoin bull market. If you plan to trade either of these coins, make sure you know exactly when the token unlocks happen. Either get in while we're still early in the bear market and no tokens are coming out, or wait until majority of the tokens are unlocked after May of 2024. If I have to pick one over the other, I would pick the tokenomics of Sui. Not so much for the long-term potential because both have predatory tokenomics, but more so for the short term. Since Sui only has a tiny amount of tokens circulating from now until November 2023, the chances of a manipulated price pump is quite high. It's very easy to move the price of Sui right now when there's not that much supply circulating. For Aptos, they have already played that card with their price run up from $3 to $20, and price discovery has already happened. I don't want to overly FUD these tokenomics. This design is standard in the industry. Even other layer ones like Avalanche had had huge token unlocks during the bull market in 2021. It's just the nature of the game. However, we need to be aware of these unlock schedules to capitalize on the limited early windows when the supply is still low, or wait until the supply has stabilized to play the long-term game. Okay, to summarize, both Aptos and Sui have the technology advancements to change what layer 1 blockchains can do fundamentally, and I'll keep a close eye on them for their ecosystem growth to see when they start to pop off. I know we've seen other layer 1s disappoint time and time again, but the years of R&D at Diem and Meta can at least give them a shot at onboarding the mainstream users. If you want to get into these tokens, do watch out for their token releases, as both tokens are still in their early life cycles. Large price swings will happen and large supply increases are to come. But if they can position themselves like the Cosmos, Polkadot, or Avalanche from the last cycle, there will be money to be made on these chains in the coming cycle in 2024. Okay, that wraps up today's video about the pros and cons of Aptos versus Sui. I also wrote in-depth reviews of Aptos and Sui before these projects launched, and you can check those out on our newsletter on virtualbacon.com. Every week I write about the market events, hottest narratives, and my personal investing insights. And it's completely free, so go and sign up to the newsletter now. If you enjoyed this video, give it a like and share it with a friend. Thanks for watching, and I'll see you in the next one.